Alright, how's it going everyone? Welcome back to another video. We're going to make a light roast today about some market news and Aurora Cannabis, which reported earnings. Today, the S&P down 1.63%, NASDAQ down 2.78%, and the Dow down 2.32%. The S&P and the Dow led by oil really struggling and market prices keep going up. And the NASDAQ got really just hammered because Apple, they have been apparently requesting fewer and fewer products from one of the main suppliers, which reported today, called Lumentum. They make the Face ID for the iPhones, and on their conference call, the CEO said that one of their largest customers, didn't reveal which, but many believe, and clearly it's obvious, that Apple said materially reduce shipments. So apparently iPhone and iPhone sales aren't going as well as planned for Tim Cook. However, if you watched my conference call review of Apple, then you would know that even though iPhones are the biggest revenue maker for Apple, service revenue hit $10 billion. And like I said, iPhones will continue to slump or remain flat as far as sales because the iPhone is very expensive. Most people don't have the money to get a new iPhone every year. And they make such a great product that it lasts for years. So just like I have the iPhone 8, I'm not interested in the iPhone 10 and the iPhone XS because my iPhone 8 is still working. However, when 5G comes out, and it will come out either next year or in 2020, many people will upgrade, just like when 4G came out, and you will have to upgrade because it will be revolutionary. And that is when we will see iPhone sales start to kick up again. We will probably have another super cycle. So all of these traders and analysts focusing on iPhone sales, and now Apple plummeted 5% today. That's right, now they're under $200. Currently at 194. This is some kind of joke. I don't know why traders and most investors are so focused on the short term, especially with a company like Apple that has record revenue last quarter, the quarter before that, and are fairly valued. They have a forward PE of 13. Many tech companies have a forward PE above 20, above 30. Apple has a forward PE of 13. I think it's a great buy right now. Big news also is that GE, one of the most famous and used to be most popular companies in the world, is now really about to default. Their stock hit a low of $8, slightly below today, and the CEO came out and said that he feels the urgency. He's going to start selling some of the company's assets in order to raise money and not go bankrupt. GE, I could have told you that it was going to fail. I don't know why you would invest in that company. And the reason that all of these tech companies and all of these stocks with crazy valuations are struggling is because suddenly when the market feels that there's a lot of volatility and instability, and with all these bear market people on TV saying that we've reached the height of the economic times and that a recession is soon to come, people suddenly start looking at valuations, start looking at price to earnings ratios. This is part of my strategy. I always look at price to earnings. I don't like to buy companies that are overvalued. That is why I'm not doing that bad out there. But if you buy companies that are overvalued and then suddenly the economy and the stock market isn't booming and people aren't ecstatic about buying stocks, then they get a pullback. And that is what you have to deal with if you're not a determined and well-educated investor. Always look at valuations. Speaking of ridiculous valuations, we got to talk about Aurora Cannabis. They reported earnings today. One of the biggest cannabis companies aside from Tilray and Canopy Growth, which, by the way, Tilray reporting earnings tomorrow. That'll be interesting. Probably a nice downturn right there. However, Aurora currently sitting at $7 off its 52-week high of $12. We all remember that crazy time in the market a couple of weeks ago when all of the cannabis stocks seemed like they just couldn't stop going up and those valuations got to the ridiculous points. Now they've all pulled back. However, I still believe they're overvalued because we're going to get into some of the metrics of Aurora Cannabis and why it shouldn't have the market cap it has. They sold 11,000 pounds of cannabis. Holy crap, that's a lot of weed. Revenue of $29.7 million. That is kind of a joke. You're making $30 million in revenue. Gross margin of 70% is very nice. However, for as far as most consumer and products that go along with cannabis, the gross margin should be above 50 or 60%, which is up 12% from last quarter. The reason that gross margin increased was due to average selling price of dried cannabis going up, as well as CBD sales increasing. They have bigger gross margin on that. And their cost of goods sold have decreased, probably due to the increased supply in cannabis. As the market continues to evolve, the cannabis market, more and more suppliers will go into it. And as you know, more supply, same demand, price goes down. Aurora Cloud has come out. That is their vape for CBD. They are apparently the only certified or licensed CBD vape in Canada. However, they are not the only one worldwide. I know that I have seen CBD vapes everywhere, and that's pretty cool. Big news is that 2 production facilities were approved by the EU for medical cannabis. The European market is a huge market for cannabis, especially Germany is one of the biggest players in CBD production, and if they have 2 facilities there, that's very, very good. But even though they grew revenue, even though they grew gross margin, and their net income of $79 million, not billion dollars, was relatively impressive. However, it's inflated due to net income from continuing operations. I believe they have a lot of investments in other companies and in other pot ventures. Their net income of $79 million is still nowhere near what they need in order to get a market cap of $8 billion. If you're going to pay $8 billion for a company, I at least want net income to be in the billions of dollars, not in millions. Even though I really, really hate valuations on pot companies, I do recognize the opportunity and that this is a growing market that is going to continue to expand, which is why net income is still low, because they're reinvesting in the business. If you really want to invest in pot stocks, I wouldn't say that now is a terrible time. If you're going to hold it for years, I think that in 5 to 10 years, Aurora is going to be higher than $7. That is for sure. However, be a spec stock. Don't make this your biggest position. Maybe put 2-3% of your portfolio in this stock. Don't go all in. Thank you for watching this video. Let me know what you think of the pot stocks down in the comments below. Subscribe to keep watching, and as always, have a great day.